We are back on Markets Today talking about fixed income as well as equities and what trading strategy do you need to look out for in the coming week. Reginald Kadzuto is the Chief Investment Officer at Amana Capital. Just before we took a break, we were talking about the uncertainty that the current market is facing with regards to fixed income and interest rates and the outlook for that. My question to you, Reginald, is it uncertainty, or are we now beginning to face a new reality and transitioning into a new reality where you never really know what's happening, but you have to make decisions with very limited information?
I think it's uncertainty. In any investment, there's always uncertainty, yes, to an acceptable degree. But when the uncertainty is combined with a bit of political uncertainty, because most of the decisions that are being made are not economic decisions, they are political decisions.
All right.
In an investment space. And we know how erratic politicians are in terms of the decisions they make today and the decisions that they will make tomorrow. So if you want to make a long-term decision, you're thinking, there's this animal called an interest rate cap. Is it going to be removed? When is it going to be removed? The same way it came when people didn't think it was going to come, it just came and caught everyone completely by surprise. And has been there for now quite a while. Are we going to reach a point where we have a president who's in his last term? I don't think he's really after populist choices right now.
Okay.
He can decide, this thing is not working. Since I'm retiring back into maybe private business life, let me remove this thing because it benefits him more with maybe without an interest rate cap.
Okay.
So there are all of these things you're thinking, so do I take a short-term position? Do I take a long-term position? And you're caught now in between.
Okay.
Where you'll just decide, okay, let me just park this money here, make something above inflation and move on. So
what you're saying is, if there are too many factors that are uncertain and they're external to your investment making decision, that it's better to probably put it in fixed assets and preserve your capital. Is that maybe a strategy that works well at this point in time?
It does. And again, I think we mentioned it. You don't have much variety on the Nairobi Stock Exchange.
That's true.
Actually,
so 5 top stocks.
Five top stocks. Once you have those ones,
yes,
your equity portfolio is good to go.
But would you be telling your investors to buy stocks at this point? Because we have had arguments, the likes of KCB at an 8% dividend yield, same as Cooperative Bank. So do you think this is a good time to actually buy some of these top 5 stocks?
Actually, if you're going to buy stocks, yes, this is the right time to buy. But buy and forget. Be like a farmer. Once you plant the seed, you don't go back after every 2 hours to see it has grown.
Okay.
You plant and I will harvest after.
However.
Exactly. So there's that element of temperament and patience becomes your. For example, guys who bought Safaricom at 2 shillings 50 cents. And they've been patient until it's reaching 20. That's 1,000% return. You'll never get such a return from anywhere.
So you really need to, I think you need to look at it like, this is for my retirement. If it comes earlier, then I'm happy, but then.
Exactly. But this business of buying, selling, I don't think we have people who have the technical skills to be able to do that. It's too expensive.
Exactly, it's very expensive because as a retail investor, I think you're charged up to, is it 2.5%? 2.5%. So if I'm coming in and coming out from one particular trade, effectively I've lost 5%.
You have to make more than 5%.
And you haven't calculated the cost of M-Pesa, because more likely you will trade over, on an online platform and use M-Pesa. Yes. So actually that's 7%, because M-Pesa transactions are 1% of the value of the money that you're transferring. 7%. So 7%.
Opportunity cost, inflation.
No,
doesn't make sense to invest in equities.
Okay.
And I think a drastic decision that might need to be made, maybe the brokers won't like me after this, but you need to get brokers out of the Nairobi Stock Exchange leadership and direction. Yes. We will see innovation.
Yes.
We will
who do you want to be actually leading the leadership of the NSC?
Get economists, get people who can think of new products, which, you see, brokers will think of a new product which is transaction driven.
That's true.
Yeah, so if you get this one, intraday trading, who's benefiting from intraday trading? It's the broker.
Yes.
Make money on both sides of the sale immediately.
7%.
But if you get guys who are more value driven, thinking how best do we get more retail people inside this, how many can we list unit trust on the stock exchange and have and more things like that in the market that will drive retail participation, that will drive institutional investors to come back. But right now the reality is that they are not there.
They are not there.
They have gone.
Okay.
They used to come only for IPOs.
We haven't had an
we've
IPO.
not had an IPO for that long.
For a very long
and the last 2-3 IPOs that took place were not successful. They bent their fingers.
Yes, they did.
Some of them bent their fingers with Safaricom.
Yes.
So even if you do an IPO right now, 90% chances most of them are not going to come to the market.
So interesting. So it's you're absolutely, I can't see any excitement when it comes to the stocks, none whatsoever. Now, when you come to the fixed income as a retail investor, would you recommend for individuals to actually go directly through the CBK and make their investments, or is it better to go through a collective investment unit such as yourselves? What are the pros and cons?
It's actually better to go through a collective investment scheme because ideally what a collective investment scheme does is offers you diversification and gives you liquidity. All right. So you're still invested in bonds. So it's a bond fund. You don't have to worry about where am I going to sell this bond when I want my money. You'll go, you'll get your money in 3 days. So
liquidity is
paramount. Is paramount.
Okay.
And the ability for them to diversify, which you will not be able. If I'm a retail investor, I have 500,000 or $1 million, I can only buy one bond. Then I have duration risk, I have interest rate risk that I have to deal with.
That's true.
But a unit trust can easily put some money in bonds, some money in T-bills, so they can literally stagger themselves across
so they can be able to collect and give you the optimum return.
Exactly.
What is your fund doing in terms of returns?
Year to date, as of August, our growth fund, which is predominantly equities, has a return of close to 11.5%.
Oh, that's a good return. Okay.
Yeah, compared to the NEC at negative 18%.
That's true.
Money market fund, I guess just like industry, 8.64.
Yes.
Again, there's no much. The corporate debt market is dead, so we're all stuck with just having to put money on fixed deposits.
So it's just two asset classes.
Okay, yeah, literally.
Okay, I think that yes, it's unfortunate, but it's the reality. I guess you can't really. It's what we have. You work with what you have. But then the next question I was going to ask in terms of returns, is it so you're saying 8 to 9% for your bond, and then about 11% for your growth fund.
Yep.
Do you decide for the clients what makes sense for them, or do you expect them to evaluate their risk and decide where they want to put their money?
You'll still advise, because most people are risk averse, but what they want to achieve cannot be achieved putting money in a money market fund. You find young people below 35 with money in a money market fund, you're thinking you retire poor at the end of the day. You have enough time to get into equities, forget about it,
make some
let
money,
it
lose
grow,
some money, keep moving.
Exactly. So we try to advise, and the advice I normally give to people is that whatever saving or investment you're doing has to be tied to a goal. Okay. So if it's tied to a goal, then you'll know where the money needs to go. So if it's something short term, yes, look at preservation of capital. If it's something medium term, you look at a bond, whatever. If something that is long term, you want that money to grow. Okay. So it just depends on the goal, how much you want to save or have by the time you're reaching that goal you are saving for, which now makes better sense. All right. But there are a lot of people that just come and want to invest and thinking, why? No, I just want to put money on the side. And that becomes difficult. That's difficult. Because you don't know what return is sufficient for them. And what is even realistic, because that's the thing, as you're saying, investor education has not been at the forefront with regards to people understanding the investment process and cycle. And it's important to actually engage a professional in one way or the other, at least broaden your knowledge and make better decisions. Yes. Okay, so we're not doing stocks, fixed income. Are we doing long dated paper? Are we doing short term paper for this week? What are you telling your clients to do? If you can go somewhere in the middle of the curve. Okay. Because so it's middle 5 year or 2 year? 2 year to 5 year. 2 to 5 year. Yeah, because. So that's 10%. I've seen about 5 years at about 10%. Around 10%. Yeah. Okay. If it's on treasury bills, do the 1 year. Yes. But again, manage your maturity structure, because you want to have enough in the short term in case rates turn, you're liquid enough to take advantage. Actually, okay, wow. Yeah, so it's not a straightforward thing. Most people think fixed income is just putting money in fixed income and moving. No, you actually have to think of all these elements of what will happen if the interest rates go up. Do I want to be holding such type of paper, or do I want to be in a paper that I can easily come out of with minimal damage? You also need to look at what type of papers the government issues the most. Okay. Most probably they will be the most so there's a lot of preparation, like anything else that works out well, there's a lot of preparation around it. That has to go through it. Okay, so my final question to you, Reginald, for this particular investing week, is there anything that's top of mind that you want investors to focus on? The market is pretty much has been the same for
Same old, same old.
Yeah.
Okay.
So if you're taking equity positions, buy into a good company and
Okay.
buy for long term.
Yes.
Most companies are at good valuations right now for doing that.
Okay.
But that doesn't mean you go buy Uchumi or
No, you've told us
yeah.
top 5 stocks.
Yeah, exactly. As in you can buy stocks that you know that they're going through a rough time now,
Right.
but fundamentally the business is
fair
good.
enough. Fair enough.
Fixed
All right.
income, wherever you can squeeze enough yield, go for it.
Okay, thank you so much for your time.
Yeah,
so you have it there. Not too much happening on the equities nor on the fixed income this particular week. It's usual. It's a trading week as usual. If you can look for any investment opportunities, try and look for liquidity, look for dividend yield, look at management. And if you're looking at fixed income in Reginald's words, 2 to 5 year, but don't just put your money there and wait. There are a lot of considerations back and forth. Today we will be looking out for the MPC meeting. That's on the 23rd of September. We'll give you updates of what decisions come out, but largely the expectation is absolutely no change. And the other consideration we're looking at from a political standpoint is the Finance Committee and the second reading of the Banking Amendment Act. We will keep you posted on this and more. Thank you for joining us once again this afternoon. See you tomorrow at 2:30. Good afternoon.